Hey everybody, this is John, and we are going to look at, for the free video tonight, just to finish up the premium video, it's like 30 minutes, tons of analysis and trade setups and correlated assets and what is going on in this market, and just kind of do a brief recap here in the free video. And this all comes down to, is this move the same as what's happened here and we're going up to new highs, or is this move something different, something bigger? And I'll show you a couple things that I'm looking at that, of course we got FOMC, we got all this stuff and things are coming together, but I'll show you the things I'm looking at. One of the main things here, of course, is this 89 period moving average. You can see here that when we fell into here, it actually held, there was a struggle and we launched ourselves. When you take out the 89, you actually do set up a trend shift. And if we come back here where, we've had a pretty much straight up market, for the most part, for like the last 3 years, but what I want to show you is the potential of what we got here is this. And why is this such a big deal? Well, for those of you that have not traded a down market, the whole purpose of a down market like this is to transfer all the wealth of a move over the last year or so back into the hands of Wall Street. And if you look at this from that perspective, then we had this move for a year where we had a head and shoulders bottom, and people are able to kind of get into the move. A lot of them, of course, human nature being what it is, get into the move late, load the boat, max up margin. Oh, here it goes. Let's really load up here. And then they just get obliterated. That's margin calls, okay? And we go from like 135 to 110, taking out a year's worth of gains in like 9 trading days, okay? So this is how the stock market works very regularly, over and over and over again, and we just haven't seen something like this in a while. So a move, from 135, a 10% move would be, 13.5 points. A 20% move then would take us to essentially 27 points. And you can see here we went from about 135 to 110, which is a move of 25 points, so very close to a 20% move. 20% move is normal, okay? And the thing about it is it happens very, very quickly. And so if we come back and we look at kind of where we are right now, and we had this nice move, let's call it 200, a 20% move would be 40 points down from where we are right now. So that would take us back to 160. And again, I'm not saying that this is what's going to happen. I'm just saying this is the kind of stuff to expect in a down market. And guess what? That takes out about the last year, a little over a year's worth of gains very, very quickly. So the question that comes up then is why does this look different than what we've seen before? And if we switch over to the weekly chart, I want to show you the main things that to me are saying that this is different. First of all, the dollar index is breaking out in a big way. All these declines in the past have also lined up with breaks out of the dollar index. That's a flight to quality. The other thing is that the Russell here is, I don't know about you guys, but in my book, this is a full-on kind of a head and shoulders topping pattern here, and we're taking out the neckline. That's typically the first sign of a potential 20% decline. In other words, what I'm saying here is that in terms of going with the flow, this is a legit setup, and we want to be very, very careful with longs. The only longs I like are stocks that are defying this, and you've got all the moving averages stacked on top of each other, 8, 21, 34, 55, 89. These are the only types of longs that I will buy in this market, i.e., buying calls and things like that too. I like Twitter, MBLY. I like this one. It's been holding up really well. For other stocks, you can see the implosions here. One of my favorite shorts right now is VMware. This stock you can see, or that's not the right one, VMware. You can see that the stock is breaking down, and I'm looking for a move to 86.05. You can't see it on this, but there's a weekly squeeze setting up, and I love the continuation there. All right, so that's the kind of stuff I'm looking for directionally. Okay, so for those of you that are into doing stock spreads and selling premium, we have a class coming up on Wednesday, or if you want to learn about this, go to simpleroptions.com/stock spreads. And this is going to be taught by Bruce, who is, in terms of just being able to find and analyze a spread, especially using the Analyzer tab and using the Greeks and explaining it in a simple way where it just becomes an automatic thing instead of wondering what's going to happen. It's like, oh, okay, when the delta does this, then you need to, do this to defend your trade. I've never seen anybody explain it better than Bruce. In this class, he's going to be talking about the best stocks for trading credit spreads, so you know exactly which stocks to use for selling credit spreads and which ones to avoid, how to set up credit spreads on stocks quickly, easily, and correctly so you never miss an opportunity to put on a wrong trade. If you're newer to doing spreads, that's really critical. I see a lot of people doing the wrong thing. They meant to sell a credit spread, but they buy a debit spread, and obviously that's completely the opposite of what you want to do. So he's got some simple ways to stay on the right side of that. The specific adjustment technique that can protect you in a bad trade, so you know exactly what to do to save a trade that goes wrong. That's critical, and that's probably the biggest thing I've seen that people struggle with. They just don't know how to do that. And if you don't know how to do that, it just becomes very difficult, because, and that's the other thing too, is people they get caught up on the max loss, and they'll see some of these situations where it's like, why am I risking, $500 to only make, say, $100? That doesn't make any sense. Well, first of all, it's understanding the probabilities that the max profit will occur. Mathematically, a lot of times if it's one standard deviation, 68%, two standard deviations, 95%. Secondly, knowing that your goal is not expiring worthless, and that's one of the biggest mistakes I see people making. It's when do you take it back off? And then third, it's knowing how to do adjustments, because if you're not really sure about that, then it's like it's hit or miss. It's like what people will do is like, oh, I make 100, I make 100, I make 100, and then I lose 500. No, that's not how it works if you understand this whole order flow like that. So what we're looking at here then is the common mistakes to avoid so you don't waste money on commissions. That's a big one, because if you're doing spreads, you're going to be trading a lot more contracts. You don't want commission to eat you up. All right, so this will be recorded if you can attend live. It will be this Wednesday, coming up on the 8th. So we'll scroll back up here real quick. And it'll be Wednesday from 8 to 10 East Coast time, which of course is 7 to 9 Central time. And if you can't attend, it will be recorded. And this price, typically when these go up on our site, instead of $297, you can get the early bird special for $97. Hope it helps. You guys have good trading, and we'll see you at the next update.